Hello traders out there in Traderland, my name's Dez here at Grok Trade. It's Monday, January 10th, 2011, and the markets were mixed today. We did see some initial pressure early this morning due to the fears and the debt there in Portugal. However, those since dissipated. Markets headed back northbound in hopes of earnings releases that are getting ready. We have a whole wave of them getting ready to be released to all of us here with waiting ears to hear the good news. We are expecting some bullish outlooks going into the future, and let's see if that's in fact what we receive. But anyway, we have the Dow down 0.3%, the S&P doing a little better at 0.14%, the Nasdaq up 0.17%, and the Russell's leading the charge at up 0.5%. Gang, this gives me a bullish outlook going into the future as the Nasdaq and Russells tend to lead the broad markets as a whole. We have the banks down. Actually, they lagged the broad markets as a whole during the day, but intraday they come climbing back up and almost going into bullish territory, but not quite. VIX did go up ever so slightly, the fear indicator by 2%. Gold also climbing, and the US dollar down, which did help out the markets and gold. All right, here we're taking a look at the technicals. We did see a significant drop today. With that drop, we almost met yesterday's lows, but not quite, giving us kind of a tweezer's bottom look. And then we rallied back up, closing the day, giving us a hammer type look. Now, the thing I want us to take a look at here is this big before I get to the histogram, the MACD bearish divergence. We're going higher swing highs, lower swing highs. There's your divergence, bearish divergence. That is no good. That is a bearish formation. Furthermore, the big trend line that we had coming up here, we are now closed below that trend line. That is no good. It shows weakness. Histogram, negative tick on the histogram, showing downward movement. We have a lower high, but here we have a higher low. So do we have a change in place getting ready to come up? Maybe. A lot of people would consider this a sideways high base formation, consolidation if you will, much like we've seen last week. You can see this, we're going back a couple weeks here. Nice consolidation sideways, very horizontal. That is not what we're seeing here. We have a rounded top. See these higher highs, and then we get a tweezer top and a bearish harami, and then we start with these higher or lower highs. Now, with this, we have a rounding or a concaved type formation. Depending on what side you are, you could call it convex. But with this type of formation, it looks like a rounded top reversal pattern. So that would be a bearish pattern, which would coincide with the bearish MACD and would coincide with the negative histogram and coincide with the breakdown of this rising wedge closing below it. Now, what do we have that's bullish? Well, the thing that's bullish is we keep making these higher swing highs. We remain in an uptrend. We remain in an up channel. We remain over all major moving averages. And matter of fact, we remain over even the fastest of exponential moving averages, such as my 8 EMA and my 11 EMA. Very bullish. So are we overbought? A lot of oscillators are telling us, yes, we are in fact overbought. The markets need to relax. We need some sort of correction taking place, but we haven't received that yet. Now, if we get a whole flurry of news coming out and giving us great guidance going into the future, chances of us going down are slim to none. And furthermore, if we still have the Feds buying up those government bonds, the chances of any significant drop taking place in the markets are dissipated due to those outside influences, if you will. Now, so what am I expecting? I am expecting a short-term bullish movement to the upside. When I say short-term, what does that mean? Well, I think the markets do need to relax a little bit. Do you call that relaxation? Not so much. So I do see us, due to the Russells and Nasdaq and the high close that we received here and the equal bottoms with the tweezers, I do see us popping tomorrow, and I see us getting up here to the 1270 to 12 or 1275 to 1280 area. 1275, 1280 put us right here at that trend line. 1275, 1280, remember that as resistance. If we go higher than that, that's fantastic. Then we need to bust through 1283. Now, don't think that we'll do that, but nonetheless, I do see us going up tomorrow, and I do see that being our high. Now, if we see some negative movements, Alcoa is coming out with earnings. Let's say Alcoa shocks us all and we miss estimates by a lot. I could see that putting a little pressure here, and especially what's happening overseas could send us down. Where should we find support? 1270 will be support, 1267 will be support, and 1265 area should be support. If we break down from that, 1260 will be a major area of support. So, Grok Trade, gang, is where you get the very best of online trading education. Put yourself on a path of education. We hope that you choose us and start with the 101 videos.